Good morning, good afternoon. How's everyone doing this morning? It's V, the Grill Economist. And we have with us the professor himself, the one and only Algo Cowboy is here. And you're listening to Algo Factory Live on the Live Lab, free on YouTube right now. And look, what you need to do is this. This is a clinic. And every day we put on a clinic. And all of our members are on the site. They have access to the coursework. They go through this amazing coursework. And when they have questions and when they have things that they want to look up, they come and they join us here on the Live Lab so they can learn through immersion. And all of you that are listening on YouTube, I want you to do the same thing. I want you to go over to algofactory.tech. I want you to join us for less than a month's supply of Flappalupa, Chino, Maccacinis over at Starbucks that you're wasting your time on 600-calorie hot milkshakes and getting fat and becoming insulin resistant. You can be joining us on Algo Factory and you'll be able to benefit yourself. Very important, and make a positive impact on your bottom line. AlgoFactory.tech, folks. Trade your job, upgrade your life. Cowboy, let's get into it.
Yeah, so I'm going to go ahead and get the link posted so we can get a few people in. And the live link. What was that live links? That old like 1-900 channel like back in the 90s. I don't know if you remember all that live links.
Yeah,
it's like you pay like
is this like some sort of phone sex thing from
yeah
God.
Exactly. It's some cheese ball. It probably was like some nasty looking chick you were talking to
or a guy who could put on a female voice.
Well, yeah. Actually, that makes it better.
Probably most likely.
That's what I want, you know.
If Live Links was launched for a modern audience today, that's probably what will happen. You'll have some guy.
Dude.
Yes, I'm touching you.
It's so gross.
It's wild.
Okay, on YouTube, Algo Factory. All right, cool. So I just sent our live link out for YouTube to our Discord group over at Rogue. So hopefully a few people pile in and, take advantage. It's free. Bring some questions. We did get an email from, and this individual I've seen, Aaron Sinclair, has been in the chats on a lot of the YouTube, versions of this. And so Aaron, we use TradingView, and I answered that email for you. But TradingView is a software that I use. Well, that's what I use. You don't have to use TradingView, but any of the knowledge I'm bringing to the table is going to be most useful on TradingView. Some of the other options are going to be like NinjaTrader and say MetaTrader, and I've used MetaTrader for that. Now, TradingView has an API that allows me to trade with my Forex broker, which is Oanda. I don't recommend any particular Forex broker. I can tell you why I like Oanda, though. It's U.S. regulated, as I am a U.S. citizen. And, when you're in that market, look, there's some good offshore, unregulated situations out there. I'm not bashing those, but I'm just saying I use Oanda. That's all. So, as things kind of get a little bit crazy, with actual dollars on an exchange, I kind of like the bigger names. Just my opinion. So, do what you will. Truckface asked, do I track all my trades? Well, Truckface, it's you kind of have to. But your whatever trading software you're using is going to do that for you. So for me, it's both on TradingView, because TradingView has that API that I was just talking about. And of course, on Oanda itself, it actually has metrics on Oanda. And I think TradingView, this is the same thing. But on Oanda, you can go and look at your P&L ratio, all of your trade metrics you can think of. That's all right there. Okay, Truckface says that Ripple bought Bitstamp. That's interesting. And what's up, Annie? Good morning. Hope you're snapping over there. Snapping, Annie. I know you're going to be snapping during Hobo Show coming up. That'll be fun. So Ripple bought Bitstamp. So that Bitstamp's an exchange I don't know how big it is anymore. If one way to look at exchanges for cryptocurrency, I will show everybody on the screen. Let me go ahead and get that set up real quick. Just make sure everything is zoomed in properly so we can, see it out there and YouTube and Telegram land. Let's see. All right, just doing a couple of techie clickety clacks. All right, so let me share the screen. So what you want to do, especially in cryptocurrency, it's still a little bit of the wild west. Oh, okay. So and just a side note here, it looks like Hobo's not playing today. That sucks. All right. Well, anyway, so with crypto being the wild west, of course you're going to have, especially in the United States, you're going to have the bigger exchanges. You got Coinbase, you got, Gemini, all those names. But then there are offshore situations, and of course you need to take a look at your like, especially if you're in places like New York, you're going to want to take a look at your jurisdiction and whatever the rules are as far as where you're allowed to trade. I know most other states I don't think there's any laws against doing it. A lot of exchanges will ask for your information. So on the exchange side of things, you may have some limitations as an American citizen. However, the point is that if you have a token that you like, it's really easy to find out where to buy it. I can show you that, but first we're going to take a look at Bitstamp and see what kind of volume it has. And so I'm going to go into CoinMarketCap, and I think I can do it this way. I think I can. So I'm going to put Bitstamp. Okay, so exchanges. See, so I typed in Bitstamp. You could just go up to exchanges as well. Spot, derivatives, DEX. And I'm going to go to Bitstamp, but I just typed it in the regular search bar. And so spot trading on Bitstamp. So let's talk about spot. I know we've discussed this, but it's kind of the free channel. So we got some beginners here. So, we're going to very briefly define spot versus derivative, right? Let's just pretend we're talking about precious metals, same kind of thing. If you buy a piece of gold, you're buying spot. You're owning the gold itself. If you are trading on the CME or something, or what's that? I just can't think right now. Where do they trade gold? The COMEX. If you're going to trade derivatives on a place like that, then you're not really. Technically, you're supposed to be able to settle in gold, but I think they changed the rules where technically they can do a force majeure, and that means that they can force you to settle in dollars instead of gold, which technically means that that means that you're probably trading derivatives. And we can kind of talk on the fundamentals of that. It might be an interesting talk, but long story short, it's contracts. At that point, you're sort of making a wager against somebody else that the price is going to be here, and then they're making a wager on they're taking the other side of that wager, and no real gold is actually being traded in the process, right? It's just people borrowing money to make a trade, right? So you might use $1,000 or $10,000 or $100,000 of your own money, and you're going to borrow maybe 1, 5, or 10, 10 times as much as that to augment your trade. So as far as spot trading goes, Bitstamp's sitting at about 6,500 Bitcoin or $172 million. To compare that to, say, Binance, so let's see. Binance, instead of 172 million, you're looking at 8 billion. So actually, that's pretty substantial, Bitstamp. To put it into mathematical terms, let me bust out my calculator. Got to turn my phone sideways because those are some pretty big numbers there. But I think we're looking at about a 50 times as much. So 172 million, was it? Divided by 8.5 billion. Yeah, so it's about a 2%. Looks like Bitstamp still has 2% of what, say, Binance is trading on a daily basis, like a 24-hour volume, and that's actually significant because Binance is just a monster. Binance is a monster, and that doesn't count Binance.us. Coinbase, for example. And remember, we're only talking about spot, so the derivatives is another story. And I don't know whether or not Bitstamp does derivatives. but Binance is like maybe a little more than 1/10 of, I'm sorry, Coinbase is about like 1/10 of what Binance does on spot. So, anyway, so I guess Bitstamp, that's a significant purchase by Ripple. And I'd have to find the article to find out what is it, Ripple Labs that bought it. But Ripple's a beast. They're like a $30 billion bank, basically. I mean, or you can look at them as an asset manager or something like that. We talked enough about Ripple on this channel and on these talks to tell you what I think of it. So, let's see. So we got some people on. Valley says C spot run. I got a chuckle out of that. It's in the middle of like my explanation. I started laughing. What do we want to talk about? As far as building algorithms, remember this is the free YouTube for like beginners, and I don't see any questions besides Truckface's question on our private group, so I can open it up to the YouTube chat. And until I do that, I guess we can just do a basic look at support and resistance, because that's pretty much the key in trading. So I'm going to start there. Start to talk about support and resistance. It's something I've been kind of keeping in my pocket for these talks. Let's go over to our friendly chart here. And we're going to look at, let's see, we're going to do this. I guess we'll just look at Euro. EUR-USD. So this is a Forex pair. It's the euro dollar. There's been some volatility this morning. Not that I'm going to go too far into that, but there's been volatility because basically it was the unemployment announcement. So the unemployment data came through this morning. So I was in a winning trade on the just a day trade on the cable. That's the pound dollar. And I just jumped out right before the data was announced, and that was a good thing because it would have stopped me out. Let's see, 30, 3 hour, 3, 18 hour. Okay, so I'll look at the 3 hour, and look, so all the algorithms, right? There's one thing that, I started out as a price action trader. So I was looking at like patterns, candle theory, like just looking at the candles and looking at support and resistance and looking at market structure. And that's how I was making my trading decisions. I wasn't really using indicators until, I was, but it was really primarily based on that. And to a degree, it's still the case. Now, I don't really use hardcore candle theory, but I did it for so long that the candle theory is inherent. For example, meaning like to me, it's second nature. I don't even have to think about it. So for example, you have this move down, and there actually are free indicators on TradingView that allow you it'll point out like candle formations. But there's a move down and then this move up, right? Well, as this moved down, I would have been able to say, but just based on support, market structure, right? And this is the main discussion, is market structure. So you have kind of a bit of a support right here. And we're going to talk about how I know that in a minute here. But I was kind of venturing off a little into candle theory. So as price made its way down to that support, there was this kind of a candle formation here where there was support. That's important. And then you have this hammer. So it's the hammer is this bad boy right here that I just circled. So I'm going to blow this up nice and big. That's called the hammer. It kind of looks like almost like that hammer on Mario Brothers from back in the day that the guy ran around with the hammer. It's like those turtles, they throw them at you from high up. And that hammer, what it means is it tells a story. Okay, so what that story is price was heading down into support. And then the bulls got interested. So price made its way down. In fact, we'll get real basic here and discuss the anatomy of a candlestick. Okay.
That's a good one.
Yeah. We'll get super basic. So today's going to be the super basic stuff. Anatomy of a candlestick, market structure, and that's, support and resistance is market structure, right? So your candle is going to have a body, and then it's going to have, some call it a shadow, some call it tails, some call it wicks. That's the thing about trading is GG, that's, we can do that in the regular lab. Okay, the comparing spot gold and gold charts over the past year, and what we have the gorilla here, and it's Thursday too. Gorilla, you got some juicy stuff for us in the regular lab, don't you? The private lab.
Was it for this Thursday that I said?
I don't know.
I don't think so. I think it's for next Thursday.
We always have juicy stuff, but I mean, I think there's kind of the, difference between.
I'll have something for next Thursday. I promise.
All right. Cool. But we'll use your expertise on the precious metals market when we talk in the.
I only trade bananas, spot bananas.
Metal bananas?
No, just regular bananas.
That's boring, dude.
I know. It's actually delicious, but continue.
It's boringly delicious. Magically delicious. All right, so let's do this. So I'm kind of building this mock candlestick, okay? And I'm just making it look normal. Just give me just a moment to do that. Okay, so green, red. I mean, look, typically on these, on a chart, green is going to mean a bullish candle. Red is going to mean a bearish candle. My charts are not colored that way. I use different colors because I don't even need the colors. I can look at a candle and tell you if it's bullish or bearish just by the, just by the construction of the candle. Yeah. But for consistency here, we're going to go ahead and do what most people do. Okay. And then let's, okay, so this is a candlestick. All right. And let me just create this real quick, this scenario. And we're going to look at kind of a scenario where price moved down and then moved up. Okay, so I'm going to build kind of what we see in reality here, right? All right, so what we're actually looking at is this sort of, I'm going to call it a pseudo formation, but it's these candles right there. That's kind of what we're looking at here. So to tell that story, a candlestick has a body and it has wicks. We just got done saying that, but now that everything is nice and, colored the way we like, I could get a little deeper into that. And this candle was shorter. This is a doji. Actually, it should be like this. And this one was red. So it takes so long to color candles. All right, so, yep. Like this. And this one is a little bit like this. So I'm literally recreating this to make it nice and pretty and big. All right. So price enters at the bottom or the top of the body of a candle. And on a bearish candle, that means that price entered right here at towards the top. Okay, that's where the candle began. And then these shadows or tails, if you will, those wicks tell a story of where price went at some time in that candle session. So a session, well, usually in a market, a session is just the day. So like, a daily session. But in this case, a candle session is going to be the interval. And in this case, the interval is 3 hours. So every candle on this chart, not the ones I drew, but all these candles here, they're all tell a story about 3 hours worth of price action. And price action is just where price went. Okay, so this candle that I pointed out, the story that this candle tells over a 3 hour period is that price entered right here on the top. And then at some point it went all the way down to the bottom, and at some point it went all the way to the top. But it doesn't mean that it did it in that order. It could have been all the way to the top, to the bottom, to the top, to the bottom, in between, in the bottom, and the top, whatever, right? It's just at some point it was there. And then I've got an Echo V. I don't know if you have a speaker going. And then the price exited the candle right there. That's where price exited. Okay. So, and that's why it's a bearish candle. That's why it's red, because price entered high and exited low. Okay. So, and that's the anatomy of that candle. Now this candle is a situation where this next candle here, price entered right here, right? It exited at this level on the prior candle, right there, exited there. So it just steps over to the next candle, enters usually at that same price. Sometimes it doesn't, but most of the time it does. Okay, that's getting beyond what we need to talk about right now. But then price at some point went all the way down here, at some point went all the way up there, and it could have done it in any way, shape, or form. Might have, just halfway here, all the way down there, back to here, all the way down again. It just doesn't matter. And then price exited the candle right here. Okay, and that's why it's red, because it entered high and it exited low. Okay, so the next candle is a bullish candle. Okay, and that is because price entered here, right? It entered low, and then and then price at some point went all the way to here. At some point was all the way down there. Could have gone there in a million different ways, and then exited high, and that's why it's green. And that's why it's a bullish candle, because it entered low and it exited high. And what's useful about these sticks is that it tells a story of how strong the bulls and the bears are. And there are a million different ways that it tells that story. Well, in this case, which the actual example is below here at the bottom, again, I will outline that for ease of understanding. So I kind of recreated that up high so we could just easier to see. So go ahead and turn this back to my normal settings. All right, so what happened here is that price was moving down, as we talked about earlier, right? And it entered this bearish candle right here, which is this big one on the first one that I drew. And what happened is that the bears pushed price down. The bulls tried to rally up to here. The bulls kind of gave it a shot, but then the bears crushed it all the way back down to here, right? So that's that candle, right? Now the next one, and that's why you have that high wick, because the bulls tried to push up, but the bears crushed it. Now the next candle is that hammer, and the hammer is a bullish candle because why? Well, the bears tried to crush it all the way down to this area, right? Entered here, bears crushed it down, but then the next thing that happened was that the bulls pushed it all the way back up, and the bears couldn't push it back down, right? So this high wick on the bottom shows a lot of anti-gravity, if you will, coming from the bulls, and then it exited there. That's what that long wick on the bottom means, right? So now this formation is not exactly a morning star, but it's kind of akin to that, and I'll show you what that means. I'll actually pull up a graphic on that. But this next candle, the reason that I might go long on this if I was doing pure price action, no indicators, candle theory, support, resistance, the key to all of this even being doable is the fact that there is support right there. There's actually support from prior price action, and we haven't talked about that yet. We're going to define that in a minute, so don't get don't get too excited. Yeah, Cool Cat, that's almost tweezer bottom-ish. It's not the purest tweet. Yeah, I would call that a tweezer bottom. Cool Cat has been trading with me for years, so he's familiar with a lot of terminology. But yeah, it's tweezer bottom-ish, and I can kind of define that. But again, the fact that there's that support right there, and we'll discuss how that works. That right there, plus this, you could call it a tweezer bottom. Plus this.
What exactly is a tweezer bottom, real quick, for the audience?
Sure.
Just a 10-second definition.
Tweezer bottom looks like this. You have two candles, and the shape of them are kind of not that important. What matters, I'm gonna have to make these wider, I think. No, it's good. What matters is the wick. Mm-hmm. So you have two candles in a row where the bears tried to push price down really hard, like this, really hard. And both times the bears got rejected and pushed back up.
Got it.
So, and then your wicks on the top are probably going to be, not, they're going to have to be like just normal wicks. Yeah. Like maybe something like that. So that's usually like this, this one candle right here that I'm looking at. I'm going to box this candle. If there's two of these in a row, that'd be a tweezer bottom.
Got it.
That candle's a doji. It's called the dragonfly doji. There's a lot of different names. Candlesticks are Japanese originally they're Japanese. Like this one here is like a bullish pointer or a sword right here. because the bulls try to crush it down. It's an inverted hammer, is also called that. It's another kind of almost like a doji, but then price kept moving up afterwards. So that's, there's a lot of different stuff. Like there's a million different kinds of candles out there. So let me delete that. Like, for example, this one here is a high test candle, or a shooting star doji. So that one that I just, I'm going to zoom into it. And so what happens is price kind of came up to a point. The bears kept trying to go up, but then the bulls rejected it. And the next candle after it had a lower low and a lower close, right? And we'll describe that too. So that was a way to know it might be time to go short.
Stuart Holden says, it seems that the wicks tell more of a story than the body.
No. Candlestick theory is a little more complex than that. We're only going over examples right now where the wicks are like that. And to a degree, there is truth to what you're saying with certain candle formations, certainly. But then there's other candle formations where the body matters more. So candle theory is extensive. I mean, look, I'm going to show you guys how extensive candle theory is. And again, I use it. It's second nature to me, not because I'm some badass dude with like I'm super genius guy. No, I've just been doing this for so long. Candlestick patterns. And anybody who has put the time in that I've put the time in, and as long as they just have a regular level of intelligence, like, they can know this stuff as well as I do. So I'm not trying to act like I'm the shiznit or anything. Let me see. So here's just an example of like different candlestick patterns. You got your, I could zoom this in, but that's not necessary right now. Yeah, your just regular candles that mean something. You got your dojis here. You've got your 3 white soldiers, 3 black crows, upside gap, 2 crows. You got the, 3 inside up, and bullish stick sandwich and bearish stick sandwich. And I'm going to guess there are hundreds of these kind of formations.
I'm going to make up my own formation, Nick.
Yeah, go for it. What's it going to call? The gorilla in the tree formation?
No, just the gorilla formation. I just have to figure out a pattern that looks similar to a gorilla's face or a head shape or something like that. It'd be my own little head and shoulders. Watch.
Gorilla. Gorilla head and shoulder. Gorilla candlestick formation. All right, we're almost we didn't even get into the it's just a gorilla candlestick holder. That's good.
Hey, they have pictures of my Etsy store.
These are your basic ones. Hanging man, morning star, evening star, shooting star. That's what I just talked about. So before we actually jump off the free one, I do want to go over support and resistance, because we did get a chance to cover some candle theory. But the reason, again, that I can take this trade is that this candle, this third candle in what's kind of a morning star-ish with a tweezer bottom, has a higher high and a higher close because the candle's open. Okay, we talked about where the candle enters and exits. This first candle entered there and exited down here, right? That's your open is where the candle enters, and your close is where the candle exited. So when you have a bullish formation like this hammer, and then potentially like tweezer bottom style, the candle after that, in this case the hammer doji or the low test candle, the candle after that has a higher high, which means that price went higher. It didn't close there, remember, it only went up that high. It actually closed right here, exited the candle at the top of the body. That's your close. Your high is how high it went. And if you look at the prior candle, you have this lower, the high is lower than the next candle's high, and the close is lower than the next candle's close. So when you have a bullish formation, right, and the next candle, in this case, you could look at this bullish formation and look at the candle after that, but this alone has a higher high, higher close candle after this hammer. So you got a hammer, higher high, higher close. That's relatively bullish, and especially if the candle after this has a higher high, higher close. And in the real situation, it did. So let me go ahead and remove the drawings, and then we'll look at this last bit. The next candle right here. So this is our formation that we were talking about. And then the candle after it, which is this candle right here, it had a higher high there, and a higher close right there than the prior candle. Okay, so you have a formation, higher close, and of course you are headed up for a nice move. So the support and the resistance, we actually talked about it in the free show yesterday, so I don't think I need to spend a lot of time on it, but support and resistance is going to be formed at pivot points. So price pivoted here and it came up, came down, and then it pivoted back up, came down, pivoted back up. Those are pivot points. Anytime price changes direction like that, and that's where price action kind of happens. Obviously, like there's going to be more price action where, say the bears got tired and the bulls picked up, and then price went from going down to going up, right? That's where that happens. And there tends to be support right there. There's actually some theory saying it's actually not exactly right there, but for all intents and purposes, it can be treated as if it were right there. So you have 3 pivots in this general area. So this is kind of creating supports like here, at the bottom of where price went. And so when I saw, when let's just say, now I'm all the way over here, and we do have 3. This is a pretty strong situation right here. 1, 2, and 2 different pivots. Actually 3 if you count this candle. So that's a good support. So when price comes down to that one, I have 1, 2, 3 pivots. I know 3 pivots create a sort of a support where price will probably pivot again. And as I see a bullish formation, not able to go below that, and in fact, getting rejected by the bulls and heading back up, that support gives me confidence that I actually can, possibly have a move go up. And it's kind of funky because that's a bit of a head and shoulders right there. So that that's a counterintuitive play because you got a head and shoulders right here and you'd want to go down, but instead it goes up. So it's tricky. But that's just some basic stuff, candle theory, support resistance. We hope you like the free show. We're going to go ahead and have the gorilla, send us off, and we're going to go to our live lab over at Algo Factory in the Telegram.
For all you YouTubers, you've been witnessing something amazing. You've been witnessing immersion. You've been witnessing learning. And here's the deal. Don't just watch it anymore. Be part of it. Join algofactory.tech and immerse yourself in something that could change your life, something that can make a positive impact, where you can trade your job, upgrade your life, have more options for yourself and for your family. algofactory.tech. Join us over there. For the rest of you guys that are on the live lab and the member side of things, we're going to switch over right now from YouTube directly to the live lab. Go for it, Cowboy.
Oh, hey, Brandon just gave us a shout out on the YouTube chat.
Hey, Brandon, what's up, man?
Appreciate that, bro. Appreciate the heads up on that. Yeah, we'll see you over there. Hopefully you're in there.
Excuse me.